Dow Jones and equal weight S&P 500 are trading next to records. And euro may have found the bottom after a pretty severe drop as dollar by extension has gained in price. However, gold seems to be doing its own thing and not really looking at the dollar too much. So gold could actually benefit even further should dollar pull back. And we will look at crude oil as it attempts to hold support near the price floor, and I'll explain what that price floor is. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, November 22nd, 2024. As always, please hit the like button, subscribe to this channel, share this video. If you have any questions, let me know. If you're a subscriber, stay tuned. We'll be covering all of these various securities, including market breadth, ETFs, large cap stocks, as well as many of the speculative securities. If you need to sign up or get my trading indicators, go to the link in the description. The sound might be slightly different. There is a little bit of an echo. I do apologize for that, but the alternative was even worse. We're currently looking at the S&P 500. So we were able to set the records here on the 11th of November. We're very close to records. And so we're most likely going to hit new records. And I mean, we don't know how high the stock market will go. It could go dramatically higher or it could turn around. For now, we're looking at this from a point of view of bullish perspective. So the S&P 500 broke out back in 2023 as early as February, but for sure around April. I'm showing it to you right now. And basically all we need to do is, did the price close above this blue support resistance line? And again, you can find out more about this by going to the description of my videos. So the indicators are showing me exactly where to buy. So the last opportunity to buy was actually back in November of 2023, so over a year ago exactly, and we're at all-time highs basically. There was not a deep enough pullback recently. For me, deep enough pullback would be a pullback towards the blue support resistance line. We haven't even pulled back towards the green line. So we just keep going higher and higher. So for now, I don't see any changes. I see still a bullish posture, and this is despite the crazy talk coming out of Kremlin. So unless that guy in Kremlin that I don't want to even name decides to push the red button for real and like destroy something with nuclear weapons, I think we will continue moving higher. If indeed a war of that magnitude breaks out, I'm fairly certain the stock markets and most of the other markets will be closed. So that's just something to keep in mind as far as contingencies. As far as your own personal safety, one thing I can for sure recommend is to have at least some supplies at home, because if we have a war going on, we will have supply disruptions for sure. So food, non-perishable food, a way to prepare that non-perishable food, clothing, winter supplies if you're in the cold climates, etc. So definitely want to have something prepared just in case. I mean, it's crazy as it sounds. It's crazy that I'm even talking about it, but it is coming to that. We're looking currently at equal weight S&P 500 ETF, ticker symbol RSP, and notice that RSP is hitting all-time highs. We're very close to new records. So this is good in a sense of the fact that on average, the stocks within the S&P 500 are moving higher. Large cap stocks are very slightly underperforming, but on average, S&P 500 includes not just large cap stocks, but some of the medium and like smallish stocks as well. So overall, this is very good news. When equal weight ETF go into records, it means there is a broad participation within the market. So again, we will continue watching this, and again, using the indicators, you can see how easy it is to trade. So latest opportunity to buy this ETF was back in November of 2023, and then it just continued higher. Here's Dow Jones Industrial Average. I mean, we don't normally look at Dow Jones as much anymore because we're more used to looking at S&P 500. I think S&P 500 replaced Dow Jones and for most practical purposes. But yes, there are still Dow Jones stocks, and Dow Jones clearly is doing quite well and it's approaching records. We're switching gears currently. We're looking at euro versus US dollar. So I mentioned about 2 months ago in October of this year, about a month ago in October of this year, that euro has re-entered a new downtrend. And notice how I know. Basically, we see a close below this red support resistance line. And at this point, we're saying, okay, that's it. That means the euro is now in a downtrend. These are actual alerts, and you can see that it moved to new 52-week lows in a very dramatic, precipitous manner, especially today. So today's candlestick can be characterized as a hammer candlestick, although it is a red hammer, so it's not an ideal kind of hammer. So a hammer means that we have a long shadow at the bottom and a solid body. So it literally looks like a little hammer. So what I'm thinking right now is that euro most likely has bottomed, at least for a little while. I am not certain we're going to continue lower from here on. Most likely we'll make maybe marginal new lows, and then eventually we'll rally. So it's definitely oversold currently. And you can even just look at the way this pattern is. So I'm gonna kind of draw it. You can see that we moved lower into October from September, sort of traded sideways, and then made another plunge lower. So this is a sort of a complete pattern, and I think we're about to bounce for euro. So normally, under normal circumstances, gold, this is dollar again, gold and euro, or gold and the dollar index. So euro is just a part of the dollar index, and this is a DXY, US dollar index. But it's very similar because euro is in fact is about 50% of the index, something like this. So it's pretty significant. A very similar pattern, but just flipped on its head. So again, move up from September into October, trading sideways, and then another leg up. So dollar is at 52-week highs. Normally, we're looking currently at gold divided by US dollar. So normally gold and dollar move in the opposite directions. And whenever a dollar is getting stronger, so US dollar here on the bottom, gold on top, XOU divided by USD. So when the dollar is getting bigger, shouldn't it pull this currency pair lower? And it sort of did from September, from like late October into November. So late October into November, sort of dollar moved higher. You can see this area between October and November. And then at the same time, gold sort of moved lower, although not nearly as much as the dollar moved higher. And then right now, since the mid-November, we're basically moving higher again. So gold is doing its own thing despite the strong dollar. And if I'm correct, if my prediction that the dollar at least temporarily has paused and euro will rally from here at least a little bit, maybe a rebound rally, then it should further help gold. So if indeed what I said is correct and euro does rally, gold should break to new records. Again, I opened this video by talking about the not a very nice person in Kremlin who is possibly going to blow up the world even because of his ambitions. How is it gonna play out? It's pretty scary if it plays out. Of course, gold is a safe haven asset. Definitely is going higher as a result, and that's despite various ideas about it being a inflation hedge. I think it's more of a fear gauge, if anything. And let's finally look at oil. So crude oil. Currently, crude oil is in a downtrend. Crude oil began this downtrend where I'm hovering right there in May of this year, and basically has been moving in this wave-like fashion towards new lows. So this is a daily chart, so each candlestick is a day's worth of activity. Let's look at weekly charts. So it's each week, each candlestick is a week's worth of activity. So currently we're just looking at the same basic chart. And what I did is I've shown the chart in the past. I sort of marked this, what I call a price floor. So price floor for oil currently is somewhere between $60 to $70 or so. And the reason why I'm saying it's a price floor is because notice this low in 2021, and then multiple lows in 2023, and then again multiple lows in 2024. And we are currently trading right around there. Now, this week's action is actually quite bullish. You can see that it engulfed the previous week. So this is a bullish engulfing on a weekly scale. Usually they are quite significant. So what I'm trying to say is this price floor between 63 and 71 could be holding once again. So what that means is we may rally, and we obviously don't know how far it will rally, but at the very least I think it will rally towards like $75, $73. We're currently at 71. But if it continues higher towards this blue support resistance line, which is at $79, then oil will again re-enter a new uptrend. It's also very much a possibility. For now, I am seeing a potential bottom here, and you can see we had 4 different opportunities. It really tried to get through to the mid-60s, and it so far has failed. So there is a chance that oil will go higher. Obviously, with all the tensions all around the world, and especially in the Middle East, oil going higher does make sense. That's it for this week's recap. Let me know if you have any questions. Don't forget to hit the like button, subscribe to this channel, share this video, and stay tuned on how to find me on the webs. Bye-bye. So to find me on the internet and to sign up for these indicators, such as this, as you can see on this chart, this green, blue, red, and yellow lines, These are my indicators that are available for TradingView.com. So if you are a TradingView client, TradingView is free, and you can actually also send me a message on TradingView.com. So there it is, and I am at MasterCharts. So these are the scripts I'm referring to, the indicators. You can have them on your chart. So all you need to do is open a free TradingView account, and then I will open the door for you once you send me your ID. It's actually quite simple, even though it sounds complicated. If you want my indicators, that's what you need to do. If you want just my newsletter, you can also sign up for just the newsletter by going to MasterChartsTrading.com. And also the best deal is to get both trading indicators for TradingView and the newsletter, and they're at $49.95 per month if you get a yearly subscription, and $59.95 per month if you get a monthly. That's it for this week's recap. Again, if you have any questions, please let me know. Thank you for watching. Have another great trading week. Bye-bye.